Alright team, so in this video I'm basically going to be teaching you guys about the proper way to use support and resistance. The proper way to use support and resistance, how to identify what is a significant area of support and the significant area of resistance, and basically how to enter your trades on that and protect your SL while taking these trades. A lot of people are always on top, oh no, I know support and resistance, I'm good at support and resistance. If you were, you would actually be winning. If you generally were good at support and resistance, you would actually be winning, because I use support and resistance every single day. I enter some of my trades purely just based off of that as well, and it has been absolutely amazing for me. It works really good, especially when you know what you're doing. So I'm going to show you how to know what you're doing, as long as you practice, of course, and move forward and really grind on this, and then you should start seeing some progress as long as you really put in the work and the time. I trade my charts naked at all times. I don't like using Bollinger Bands and you know, RSIs and all these things. I don't use any of these things. I trade my charts naked. I follow trends. I use patterns. I study price behavior. I just use trend lines, sometimes Fibonacci, and that's literally it. Nothing more. That's literally how I trade my charts. Price behavior, literally pure price action. And that's basically how I'm going to teach you how to trade as well, because this is what I'm specializing in. Also, another thing is I am a day trader, so there's going to be no swing trading strategies over here because I do not swing trade. I am a day trader. So without further ado, team, let's just get into it and let's make this happen. All right. Let's look at this example over here first of all, right? As you can clearly see, you know, market has been falling since that point over here. Market has been dropping, but not a clear trend as to say what the market's going to do. So pretty good time to trade the market, of course. Number one, what you want to do definitely is identify support and resistance areas. So how do we do that? Let's first of all get out our horizontal line. Price, as you can see, it touched and reversed at this point. Touch, reversed at this point. There's more of a spike point. Let's come over here. The same thing happened. Another thing to note, I mark up all my charts on the H1 first. I always mark up my charts in the H1 first. It's just how it is. It's just how I've always been. Always mark up my charts in the H1, and then of course on entries and whatnot, I will drop to lower time frames and maybe mark up there too for better entries. But to identify major support and resistance, I always do on the H1. All right. So then over here we have another area right over here, support and resistance, as we can clearly see. Marking it up over there. Take note of how I always do this on the bodies of the candles, right? I always do this on the bodies of the candles. I ignore the wicks because when I drop to a lower time frame, that's when I will take the wicks into consideration, of course. So now I think we've done all the areas of resistance, because that's where support, because that's where price is at right now. And there's two areas of resistance, right? Where price has touched multiple times, all within our area of field of view, our area of view, the place, everything we can see, that's what we're marking up on. We're not going to go back decades. We're just going to do everything as we can clearly see on our current screen. And we have a beautiful area over here that price is touched and respected, right? And if we come over here, we have another area here, right? And we have another area over here. I mean, these are kind of close, so we could just mark the closer one and ignore this one. It's up to us. And we have another area over here, right? Different areas, right? We don't want to do too much to get it too messy. We don't want to do that at all, right? So what's happening over here is that price is over here on our area of support. Same thing is over here on our area of support. Now, because we have significant areas of support and resistance, meaning down here, because this was a reversal point, it was a spike point, price did come and spike up in the opposite direction. So we have possibilities of what could potentially happen in this particular trade. Now, we don't want to miss out on any opportunity, right? We're trying to take our best trade at the best possible point in time. We're trying to take our trade at the best possible point in time, and we don't want to miss any movement, right? We don't want to say we don't take any buys here, because then, you know, what happens if price breaches below and comes over here and we lose the trade? So we just want to know how are we going to enter this trade possibly, right? So that's what we do is we observe, we find, okay, it's on our area of support. Nothing much is happening, but it's on our area of support. What could potentially happen over here is basically price reverses and goes on up, or price drops below. So that's what we do then, is drop to a lower time frame. This is what the M15 is telling us, right? If we take a really good view at the M15, we can see momentum is clearly slowing on this area of resistance. It's slowing on this area of resistance. And now let's look at what the candlestick candlesticks are telling us. All right, so what our candlesticks are basically telling us, you see on the M15 we have our hammer right over there, our candlestick right there. You see how it's kind of slow momentum here. It tried to go bearish and then ended up closing bullish. So what is that telling us? All right, slow momentum for the sellers. It looks like the buyers are entering the market. We're getting reversal candlesticks now. Candlesticks that are showing us a potential reversal, right? Now the thing is, you need to also understand your candlestick patterns. Now what you can do is simple. Download the Candlestick Bible. It's absolutely free. It tells you all about candlesticks, what certain candlesticks mean. It's very, very important, especially when trading. You need to know what certain candlesticks mean. You don't have to know all of them off by head, but you do need to know some of them for sure, right? So we're seeing a potential reversal. Now what we want to do is, okay, we've seen all this. So we're seeing a potential reversal. It's in a strong area of support. So now let's watch the M15 and decide what to do. This is where we'll come in and mark out, use our trend lines over here. There we go. Okay, so this is when we're going to come and use our trend lines, right? So now we can just mark up areas a lot more efficiently just to look for a point of entry. So I'm deciding I'm going to take a buy because even, the M5, getting strong bullish movement, everything's kind of slowing from the bears. So how do I determine a point of entry over here, right? So I'm just finding the support and resistance zones on the M15, right? And then watching for candlestick patterns and movement. So this is my most immediate area of resistance on the M5. So I'm waiting for it to play in this area. I'll of course keep cross-referencing and checking my other time frames, but a breach above here, I'm definitely going to enter on my buys. The reason for this is that I determined that this area, if you breach this area, it's probably going to proceed on upward. Because we are getting slowed momentum. It has been falling for some time and it looks like the buyers are coming in the market. The candlesticks are telling me that, the area of support is telling me that. So therefore, we just want to wait for the best possible point of entry and not enter too early, because price is falling, as we can see, and it could break and continue going down below. So let's find it. Now again, with the SLs, you guys know, SLs always give them some breathing room below give them some breathing room below your area of support or resistance if you're taking a short. But of course, let's go to a higher time frame, get a better look at this, make sure we are risking correctly. So our point of entry will be over here. Our point of TP will be over here. However, we have another area over there that we did mark up earlier, and then of course this being the final area. Now let me let you know a little something. As you guys know, I take my profits 200, 400, 600. Anything after that is extra. I'm trading my positions. I'm just watching out for everything. So this is how we're going to take our trade. This is basically how we're going to take our trade. When price starts to break above there, because even on the H1 we would have gained a lot more momentum, right? Okay, let's just hold it over there. Let's check what's happening on the M5. So on the M5, we see that it did respect our area again. It did respect our area of support on the M5. Price is respecting and it keeps bouncing off of it. I had a bounce over here, a bounce over here, I have a bounce over here. So this is telling us what? It is respecting this level. This level is respecting, price cannot break it. Therefore, it's going to proceed on upward. And we have our breach over here. And we're just waiting for a candlestick to close in this range, because remember, it can just come play over here because this is the area of resistance and then go against us. So what we are doing is waiting for a break. So let's just watch price again. No candlestick has closed in our region. It has gone to the region but has not actually closed. So no entry. Closed, then we entered. You understand? It closed, then we entered. Price closed above this area, then we entered. That's exactly how you do it. And of course, it's going up, you're securing profits. You're securing profits for sure. You're definitely up way more than you're definitely up about 600 pips at this particular point. Anything else is just extra after that. Respecting our areas, and we just watch price go. The slowing momentum also showed me the respect of the area of resistance, of support showed me. The repeated touches on the area of support also showed me. The strength of the candlesticks on the H1 showed me as well that price was going to continue on upward. You know, the strength, the slow to momentum, as you can see, pin bars and everything, doji at one point, that's basically telling me that we are out of the sellers and entering the buyers. But I had to wait for the best possible moment to entry, so I went to the M5, and then I discovered that, okay, I have support and resistance on the M5, so now I just gotta wait for it to breach above that level, and then I proceed on upward. Very easy, as long as, okay, let me not say very easy, right? These are not the good words to be using. Not very easy. It's gonna be hard to master and learn, because remember, when you're in the market, it's a lot of emotions back and forth. But with practice, it's definitely gonna get easier. And once you master it, you're gonna be at, of course, pro trader level, and then from there you'll see just how fun it can be. I don't want to keep using the word easy because I don't want you to think that this is easy, it's just a pastime. No, this is very difficult to learn, but with dedication and practice, you will get it. You definitely will get it. And once you do, profits on profits on profits on profits. So that's it from this video, team. I hope you guys find it very helpful and beneficial. Make sure to check it out. To remind you, H1, we mark up our support and resistance. We check what's happening on the M15, see what the candlesticks are telling us, and then we look for entries on the M5. Plain and simple. That's all it is. Love you guys, and I will catch you guys in the breakdown videos. And after that, that will be it for the beginner's course. So I hope you guys will enjoy it. Peace.